Time now for your Money Watch report. The latest job numbers are in this morning. The Labor Department released those results for May, and CBS News business analyst Jill Schlesinger is joining us live from New York to discuss it all. So, Jill, let's begin with the results. What are we finding?
Well, the economy produced 272,000 jobs. That was better than expected. Actually, about 100,000 more than the previous report and 100,000 more than even expected. The unemployment rate, it did drift up from 3.9 to 4%. Wages, this is kind of an important piece. Wages were up by 4.1% from a year ago. And this is important because we need people to make more money than the inflation rate is rising, right? So 4.1% is a good hefty amount more than the 3.4% of the consumer price index. That should help workers who are struggling to keep up with prices.
Well, that's certainly good to hear. But if we take today's report and then add that to other data that's available, what is your sense of the big picture for the labor market right now?
I think that we're in transition. You know, earlier this week, the government said that job openings dropped to the fewest since February of 2021. So job openings are going down. On the other side, layoffs are actually also at a nice low level, lowest level since December of 2022. And people are quitting at a slower pace, though. That sort of does indicate that they think the labor market's not as strong. The real issue here is that the labor market has really confounded experts and analysts for so long. We are still trying to normalize after the sizzling pace of the post-pandemic era. We did see job creation across a lot of different sectors, so we just have to see whether that continues or whether it starts to drift lower in the coming months.
Well, before that, though, we want to talk about the Federal Reserve, though, right? They are meeting next week. How might today's report impact their decision on interest rates?
I don't think the Fed is going to do anything next week because they want there to be a more gradual slowdown of the job market. So they want to see job creation start to go down towards the hundreds. They want to see the unemployment rate drift down below 4% and really not just at 3.9, but more like 3.5%. And the weird thing is the Fed kind of would like wages to also come down a little bit. They want this because when wages come down, consumers slow their spending, and that can also help bring down the inflation rate. So I think the Fed does nothing next week. You know what, Fed officials, take the summer off. We'll see you in September.
Good advice to them and to us, as always. Jill, thank you so much. We appreciate it. A reminder that you can always get the latest analysis from her by going to jillonmoney.com.